What's going on, guys? We're going to do a technical analysis look at the SPY. So I know a lot of you guys like to trade this, so let's go ahead and get some levels kind of marked out for 0 days till expiration. Bit of a gap down today with an initial sell-off, and then we had a recovery in the later half of the day. Now the line in the sand is going to remain true to $390. If and when the SPY loses 390, that is an easy short position to take for a quick ride and make some money. So make sure you guys are putting these alerts, or setting alerts on your charts. Depending on what brokerage you have, pretty much all brokers are going to allow you to set these alerts, because sometimes, in the midst of the day in the price action, you guys kind of forget about the macro levels, right? And the next thing you know, you're scrambling around and it's too late. You feel like you missed a trade. Let's make it very simple. $390 to the downside. Now, if you can kind of see where exactly we stopped, overall the S&P 500 was pretty much flat today, okay? We did recover the lows of yesterday, and we closed at $396.42, up just 1.24 on the day. So not even a percentage point, pretty much flat. So what we are looking at here is exactly where we stopped, is right here at this channel line. This channel line is called the linear regression channel 50. I love to use these lines. It provides a great indicator of supply and demand zones, and kind of playing off of these zones to know, are we in the middle of the range? Are we approaching the top of the range? Are we at the bottom of the range? So with that kind of being taken into consideration, literally where we stop today is going to be right here at the middle linear regression line, which, if the S&P 500 can confirm this tomorrow, we do have room to continue this dead cat bounce into 399. Now, I would personally suggest selling and taking profits on your calls if you are long into 399. That is going to be your 5-day moving average. You do also have the 50-day moving average resting at about $400 and some change, okay? So even though we are getting this little bit of a bounce, it does not mean that we are not going lower. If you can kind of see where we gap down to today and tagged this $390 range, there's nothing but open airspace down below. Meaning that if we do have a 1 or 2 day bounce into 400, into 404, consolidate, get rejected, and start to roll over, when and if we lose 390 can be very aggressive to the downside, with your macro demand sitting at around $373. Now let's kind of look at the shorter time frame perspective here. You can see this initial sell-off. The loss of the pre-market lows today was a fantastic short setup. You could have also taken the first hour candle, used the lows as your entry. That correlated perfectly here with the pre-market lows. As soon as we lost those pre-market lows of around 391.75, we got that initial washout to 390. So that presented an fantastic trade. Just understand, for some of you guys who are entering into these plays that early off of the bell, try not to get shaken out. If the hourly candle is trading below the 5 and 10 day moving average, just have confidence to hold that trade until you get into the green and then start to sell for some profits. Now, if this does reverse like it did here, and you were sitting and never took profits because you were waiting for that second flush and continuation through 390, the moment we start to close over the 5 and 10 day moving average is time to start thinking about exiting the trade, either for a small loss, a break-even loss, or this, that, and the other. The last thing you want to do is get trapped down at the bottom of the range, watch it consolidate for 2 or 3 hours, and then rip your face off back to the upside, because we understand that if and when we start reclaiming some of these levels of supply, we are going to go from supply to supply to supply to supply. Now, as soon as we got over this 20-day moving average here, you can see on this hour candle here at 10 a.m. Pacific Standard Time, we did briefly get up here into this area of around 393 and test. And I was actually speaking to one of the members in the Discord today on a private call, letting him know that if we do kind of test this 20-day moving average and we get the next candle to follow through, let's go ahead and take that long. That would also be correlating with taking out that first hour's lows, with intentions to try to ride this up into the next area of supply. That next area of supply being the 50-day moving average on the 1 hour time frame, and that price was sitting at around 396. So we did scream into 396 and surpass that on the close. And you can see now in the after hours just kind of consolidating sideways. So one thing that we're going to be looking at going into tomorrow is anything over today's highs of around 396.78 is going to have an initial push to 398.17. Now here's the one way to play it. If you are holding calls overnight and we do get some sort of gap up into 398 or 399, I would sell for profits right there. If you have multiple contracts, I would hold on to a runner, let it pull back, see if it can consolidate, and then take out that 399 400 area, because over 400 is going to have a lot of room to the upside back up to 404 and 405. But if we open up flat or we open up red, give it enough time on an hourly candle to come into some of this rising support at 395. This is definitely going to be rising. That's your 5-day moving average. Your 20-day moving average is sitting at around 394. So use one of these two technical areas as a stop if you're long and we open up flat and or red. So let me say that again. If we gap up to 399 or 400 come the morning time, I would sell into those profits. If we open up flat, meaning somewhere close to 396, 397, 395, I would give it enough time, at least 1 hour, allow the bulls to get a little bit of steam and some credit to try to trap some shorts here. Let's see if we can trap them off 395 rising support here on the 5-day moving average and go red to green. Now, if we gap down, depending on if we gap down through 395 or 394, I would still give it 30 minutes to an hour to see if this support is going to hold and they're able to trap those shorts and go red to green. Now, obviously, if you go into the second hour of the day or the third hour of the day and we start confirming new hourly candles below the 5, you would expect it to go to the 20. Anything below the 20 has room down back to 393. And your macro flush on the SPY for tomorrow intraday would be a loss of $393 with a 390 price target. And obviously your big area that you would be looking for to either add to your position or start a short position would be the loss of 390. I hope this video helps. I hope it was easy enough to understand. I will see you guys all in the Discord tomorrow. For those of you guys looking to want to trade with me each and every single day live and get access to my strategies and watch lists on the current stocks that I am trading, chat with me during trading hours, definitely head over to evolutiontraders.com, become a gold lifetime member. I will see you guys all in the Discord tomorrow.